101.3 Philadelphia. An Odyssey station. Investor Schooling Live with Phil Falcone and Larry Steinhaus on Talk Radio 1210 WPHT.
Go.
All right, good morning and welcome to Investor Schooling Live, coming to you from Investor Schooling headquarters. My name is Larry Steinhaus, and my business partner Phil Falcone is not here today, and I've got a special guest, Paul Moderano, who is our marketing director, with us this morning. And Phil and I are both the founders of Investor Schooling, and you're going to get ready to learn real estate investing and stock options trading. You can call us anytime during the show with your questions at 855-939-1137. That's 855-939-1137. That's right, we are a live program, so you can call us anytime during our show, and we will take your calls. Don't worry about what we're talking about, because we love to take your calls. Investor Schooling is located in Langhorne, Pennsylvania, and we are serving the Philadelphia area in a real brick-and-mortar building. We are local guys, accessible to our students a minimum of 2 nights a week. You will get to learn this business, the business of real estate investing and stock option investing, from people who live it every day. So on today's show, we're going to be talking about some cool stuff. First of all, I'm going to suggest that you put yourself on payroll if you have a company or a business. I'm going to be talking about that. We're going to be talking about the best way to fight inflation. We're going to be talking about President Poopy Pants and his new taxes. Did I just say President Poopy Pants?
No, you did not say that.
I just want to make sure that I didn't say President Poopy Pants on the air. We're going to be talking about credit scores and how to build your credit. We're going to be talking about lending money out of your IRA. I'm going to teach you how to do that. That's a really cool thing to do. We're going to be talking about how long you need to hold an FHA loan before you can get another loan or move out of your company, right? Or move out of your house. And of course, we're going to be getting into the stock consultant with the picks of this week. All right, so I want to introduce everybody to Paul Moderano. You've heard Paul on the show before. Paul is our marketing director over here at Investor Schooling. So every time you see any one of those ads that we have on Facebook, it's because Paul searched high and low in Google and found the most beautiful woman he could put in those pictures.
That's usually what happens.
Because Paul is like really, really into these pretty women, young pretty women, holding up money and saying how great Investor Schooling is.
Yes, well, that's pretty much because, you know, I am a piano player at night, and I go around and sing and play piano, and young pretty women jump around in front of me and throw money at me. So, I mean, that's pretty much why I find those pictures.
So,
and put them up. I think that's what it is.
Are these people pictures of the women who are you know?
I don't know, Larry. I don't know where you're going with this, but I do have to say, Phil Falcone, where are you? Because I think Phil does a much better introduction than you.
Well, that's why I had
like
Phil do the introduction.
I know, Phil.
Because his voice is just perfect. You know why, right?
Why?
Because what do you think? What's the answer?
What's the answer?
You know why? You know why his voice is better, right?
Yeah, it's because
That's why.
He does not sound like a mafioso shyster. I think it's because of all the aloe smoothies that he drinks.
Oh, yeah, you guys need to know about that,
That's
too.
right.
So Phil's really into health, and he takes all these aloe smoothies. He's really into aloe. Actually, he did a presentation on it one day. All right, so let's
You
talk
can win an aloe bath from Phil Falcone.
Be careful. You know, somebody might actually take you seriously. I don't think anybody ever takes you seriously, though, Paul.
I don't know. I hope not.
All right. So have you guys, if anybody out there has seen our billboards, let us know if you've seen our billboards. Give us a call at 855-939-1137. Let me know if you've seen our billboards, because we started putting this billboard campaign out, and a lot of people are saying they're seeing them, and I want to know if you've seen them. 855-939-1137. And, of course, you can call us about anything else that has to do with real estate or stock options or anything else. So I got a question for you, Paul.
Okay.
Do you know what the best way to fight inflation is?
The best way to fight inflation.
Yeah.
Have a bunch of rental properties so that when the rents go up, you're making more money because of inflation.
That's actually pretty close to the answer. So as you know, I don't know if you realize this, but inflation was the highest it has been in 30 years, 6.2%, which is unbelievable for the year. It's an unbelievable number. I'm sorry, the CPI was 6.2%. The inflation number is unbelievable. It's unbelievable number, how high. And have you been shopping for a car lately? You actually did, didn't you?
I did. It was a couple months. Used car because of the chip shortage. They didn't even have new cars
That's right.
to sell.
That's right, because you came to me because you wanted a lease.
Right.
By the way, this is something else we teach. If you're ever buying a car, you want to learn how to buy a car the right way, which is using a one-pay lease. I don't even know if I should get into this. This is a pretty lengthy conversation in one-pay lease, but one-pay lease is the absolute best way to buy a car, and most people don't even realize it. But if you guys want to find out more about a one-pay lease, go to investorschooling.com and sign up for Thursday class. Grab me, and I'll tell you about the one-pay lease, because that is the best and cheapest way you'll ever buy a car, and you'll get a brand new car for less than the price of a used car, which is really, really neat. Anyway, so getting back to what I was saying, so you were looking for a car. You can even buy a new car,
Right.
Because of the chip shortage. So you bought a used car.
That's right.
Did you? And I don't know what you paid for that car, because I know the car you have, but did you feel that you overpaid for that car compared to what you would have paid a year or two ago?
Yeah, I definitely did buy a little bit. That's just because that's what they were going for. I needed a car, and my old one was shot, and they pretty much had me.
Yeah,
I had to get
there was no negotiation, right?
There was no negotiation.
I know. My wife and I we went out to buy a couch the other day. We decided to get another couch, which is really funny because we keep buying couches. This is our third couch in 3 years, which is really funny.
The dog destroying the couch.
No, actually, we just wanted something a little more cozy. So we go out to buy this couch, and I bought couches before. It is what it is. But this couch was $3,700 for a couch. And I'm like, usually you go into the furniture store, like a car store, you go in there and you go, hey, it's 37, I'll give you 33. They go, no. You'll give us 37, and if you open your mouth again, it'll be 39.
Well, the question is, what are you doing to destroy these couches, Larry?
It's not.
Why are you destroying couches when if you would just calm down a little bit, the couch would be all right.
No, it's not that. I just want a more cozy couch.
Couch.
Because the couch we have is okay. It's just not that comfortable. We want to get something more comfortable. Hold on, we actually got a
needs
call.
more room for activities.
Why don't we talk? Why don't we get off this topic? Because I know where this is going to go with you, Paul. Because this is what you do to me every time you're on the show.
Well, you keep telling me to come back. I don't know what your problem is. I've tried over and over to get fired and not be on the show.
Phil, come back. All right, hold on. We got Rick from King of Prussia. What's going on, Rick? How can we help you?
Hi, I have a quick tax question. I'm considering converting some IRA into a Roth IRA, and I was wondering, is the money you take out based on, or the taxes based on your taxable income or adjusted gross income?
Well,
the tax rates.
Yeah, so it will definitely go into your adjusted. Your adjusted gross income you'll be adding to your adjusted gross income by converting the IRA to a Roth IRA. So for you guys who don't understand what Rick's talking about, he has an IRA, and in that IRA, if he takes the money out when he's 72 and a half, he gets taxed on it as he takes it out. But now, if he converts it to a Roth IRA, he pays the taxes now, and anything that grows into is tax-free forever, which is freaking awesome. I love that. That's the best way to have an IRA is with a Roth IRA. And most people will I have no IRAs anymore. I've converted all mine, Rick. But you will pay taxes on the IRA. But what is it? What funds is that IRA? In other words, what have you invested in that IRA? Because I may be able to give you a trick on how to pay less taxes.
Well, it's in Vanguard real estate.
Oh, it's in a real estate fund?
Mostly. Yeah.
Is it in real estate?
Yeah.
Like you own the real estate, or it's in a REIT?
A REIT.
Okay, all right. So you're not going to be able to do this then. All right. So a lot of times what people will do. So you have to understand that the day you convert your IRA to a Roth IRA, you pay taxes on the value that day. So sometimes, let's say you have an investment fund that it's a really bad day in the market, and the fund was worth $100,000 today, and tomorrow it's worth $80,000. That's the day that you want to convert it, because you want to pay taxes on the $80,000, even though the minute you convert it, all those stocks or all those investments went right back up to 100. You're only paying on the 80,000, which is a great way to convert a IRA into a Roth IRA, because it's based on the fair market value. So a lot of times with real estate, and of course you have to do this within reason. A lot of times with real estate, you may buy a piece of property that, again, let's say it's 100,000 and it's only worth 80,000 to certain people, as long as the appraisal can prove that it's worth 80,000, and you move it over to by the way, I'm not an accountant, I'm not an attorney. Please check with your accountant or attorney before using any of the techniques I ever discuss with you. But here you go. So you would move that over, and you'd only pay tax on the 80,000 instead of 100,000, and you probably save some money. But it will be on top of all your income after your adjusted gross, and you'll be paying in that tax bracket. All right, Rick.
Okay, so the tax bracket.
Yeah.
tax bracket is based on the adjusted gross income, not the taxable income. So, like I'm single, I'm a widower, and if I go to the next tax bracket at from like 27 to 32 at 165,000, is it like do I subtract my gross income from that to figure out how much I can do it and keep within that bracket, or is it the taxable income minus the 165,000 before I go into the next bracket?
It's gonna.
You know what I mean?
Yeah, I don't have the brackets memorized. I always have a cheat sheet with me, but I don't have it in front of me right now. But what you can do, just so you understand, you don't have to convert the whole thing at once either. You can convert part of it at a time. So this may be a way to save taxes on it as well. And again, depending on what bracket it pushes you into. But in the end, if your goal is to, but by the way, how old are you?
67.
Okay, so you do have time for the investment to grow, because sometimes it's not really. Sometimes you could sort of say it's too late to convert your IRA to a Roth IRA, because you're at a certain age where you're probably not going to make. You're not going to make enough money to make up for the taxes that you made. You're probably on the borderline at 67, unless you have a really good place to put this investment. Now, it's funny because we were going to get into the topic. Go ahead.
I just want to add, I should not need this money. This is for the children. So I'm not planning on using this money. Does that make a difference? Yeah, I want them to have tax-free inheritance, basically.
Are you giving them their the gift every year?
Not yet, no.
Okay. All right. Yeah. So it sounds like you've been talking to a tax planner, which is great. So you want to talk about? I think it's 15,000 or 15,500 now. I don't remember the number off the top of my head, but you can give them 15. I think it's 15,500 every year. I'm sorry, for each person you want to give it to, without that being a taxable event. There's a lot of things you need to do, and obviously, we would have to talk further about everything that you're doing now, in order to advise you. Now, again, we're not estate planners, we're not tax, but we teach financial education. So if you wanted to stop by the school this Thursday and grab me and pull me aside and talk a little bit more about what's going on, that would be great. And you could just go to investorschooling.com and you can sign up for a free class. We could also teach you some great places to put that money. And again, we don't sell anything, so we don't sell REITs, we don't sell mutual funds, we don't sell options, we don't sell anything. We teach you how to go buy them, and then which ones that might work for you, and then you go do whatever you want. You can use any advisor you want. We don't even care. So, but we really appreciate the call.
Okay.
And we're looking forward
to.
Hopefully, we'll see you this week. All right. Let's do this. Let's also go. We got Dave also in Southampton. What's going on, Dave?
Yeah, this is Army Dave from the coffee.
Army Dave, the coffee guy.
Coffee this morning.
We need to hide our Dunkin' Donuts cup now, don't we?
Army
no,
Dave.
I don't want to hear that, Larry.
So, Dave, tell us about your coffee.
Hey, what's up, Paul?
How you doing, Army Dave?
My coffee, coffeeplatoon.com. We're going to be live pretty soon on the internet to order it. We're almost there, but yeah, we have coffee with all the military teams: Army Strong, Semper Fi, Aim High, Anchor.
Hey, Dave.
Great coffee,
Dave, I'm sorry, I got to stop you. The audio is so bad that I got to stop you. I'm sorry. I don't know if you're on Bluetooth or whatever it is, but it sounds terrible. So
nah.
All right. So real quick. So Dave, Rick, what's the name of the coffee company?
The Coffee Platoon.
Coffee Platoon. All right, guys, look up Coffee Platoon. Thanks, Dave. I appreciate it. I just can't let that audio. It's terrible in my ears. All right, let's get back to Paul.
Dave shouldn't be drinking coffee while he's talking.
Or driving.
We're driving.
Right? It could be worse. He could be texting and driving.
Really surprised that Rick Edelman called into the show for some financial advice, Larry. I'm glad, though. I'm very glad that, he has his own show right before this, but I'm glad that he called you.
No, that was a different Rick. I do understand, I do understand what you're saying, but no, that was definitely a different Rick. So I also want to talk, I actually jumps me to another topic, which is something that Rick just mentioned, which is his IRA. And did you know you could actually lend money, Paul? I bet you knew this. That you can lend money out of your IRA for people to buy real estate.
I do know that because you talk about it all the time.
Isn't that great?
At Investor Schooling.
So this is something that a lot of people don't know. So first of all, most people don't even know what an IRA is, which is really funny. They go, "Yeah, I have an IRA." I go, "Well, what's it invested in?" "It's invested in my IRA." No. Your IRA is an envelope that holds investments. The IRA is just a set of rules in which that investment has to be held in, and it's a set of tax rules. So you could actually get what's called a self-directed IRA. We use a company called Camaplan. It doesn't matter who you use. It doesn't matter to me. I don't care. They're just friends of ours over at Camaplan. And you could you could put this money into a self-directed IRA. You could actually lend the money to someone. You can buy real estate in your IRA. So, if you're still listening, you could actually buy real estate in your IRA, not just a REIT. You could actually buy a house. You could buy a building. You could buy anything you want in this self-directed IRA. And it works just like anything else. There's certain rules and regulations that you have to do. So, first of all, you can't benefit outside your IRA. One of the things you need to understand is when you have an entity such as an IRA, the IRA has to be separate from you. Yes, you tell the IRA what to do, but that's all. You can't, like, in other words, you can't buy a building and then manage the building and then make money as a manager. You just can't do that. The IRS has specific rules on that one.
But you are not an accountant or a lawyer.
Yeah,
I
just said that.
I know, I'm saying
And there's
it
a
again.
disclaimer in the beginning of the show, too, that says that, too. Because if I was an accountant and a lawyer,
You'd be a boring person.
no, that's true, too. But I'd also be...
You'd also be
I
what?
also wouldn't make as much money as I make now.
That's very true.
My mother always says that to me. She goes,
No offense to accountants and lawyers.
Yes.
I was just making a joke. Larry, I am so impressed with how much you actually prepared for this show as opposed to the last time I was on.
I prepared for the last time you were on too, and you just took over the show.
All right, well, I guess I'm on my better behavior today.
Yeah. By the way, anybody else out there has a question? 855-939-1137. 855-939-1137.
855-939-1137. Call in now.
Paul, you're really good at that. You do
thank you.
You do some other voiceovers too, don't you?
I do the Phil Falcone. It's not really Phil Falcone. It's just me pretending to be Phil Falcone.
Well,
Hey, this is Phil Falcone from Investor Schooling Live.
that wasn't even close.
That wasn't close at all.
Wait, I bet you Jim Kelly. Jim Kelly's our producer.
Jim Kelly
over
can do it.
at WPHC. So Jim,
House is beautiful.
that was close.
Close.
Just for a second. For a second, I thought you were channeling.
I have
Phil.
to start drinking aloe smoothies and rubbing it all over my body, and I'll be all set.
So Jim Kelly does a whole bunch of voices. Jim, can you do Phil Falcone?
I can give it my best shot.
All right, go for it.
I could teach you how to make ugly houses and make them beautiful. Hey, this is Phil Falcone.
Okay,
Can you do Larry Steinhaus?
It was so bad. It was so bad that it was actually really, really funny.
Anything to help the show, Larry.
What? What's that?
Anything to help the show.
Hey, we need all the help we can get because Phil Falcone's
Yes,
not
he
here, and we got nobody that sounds like what? No, that was the wrong
That's
button.
the wrong
That's the
button.
one.
That's the wrong button.
He does
See
not
that?
sound
I
like a
can't even-
mafioso shyster.
No, what does he sound like?
A mafioso shyster is like, hey, how you doing? I'm Phil Falcone. How you doing?
That sounds like Rocky Balboa.
I know. It's a
That's
mafioso
some
shyster.
mafioso gangsters.
Hey, how you doing? Mr. Gazzo says, you know what? I get the $200. I break your thumb.
That's it. That's a mafioso shyster.
All right. Anyway, let me get back to. I don't
Oh,
even know
we
where
should
we
talk.
are now. What are we talking
Well,
about?
we were talking about IRAs. Why don't we
Yes.
talk about? Actually, why don't we expand a little bit? Let's talk about financial boxes.
Financial boxes.
Financial boxes.
That's actually a really great way to describe how the world works.
I know.
So you can have a financial box called an IRA that you could put investments in it. You can have a financial box called a Roth IRA that you could put other investments or the same investments in. You could also have a financial box, which is anything you personally invest in. You could have a financial box called an LLC.
Yes.
You can have one called a trust.
You could have a property that's a financial box.
Sure. And I'm not sure where you're going with that. Why don't you
This is
explain it?
exactly where I'm going with this. So, when I started investor schooling, you talked to me about, having different boxes that create income. So, there's a whole bunch of different boxes that I've
Oh, so
actually
you're talking
put in
about
place.
different. You're talking about different streams of income.
Yes, but you were talking about. I've been calling it financial boxes. An IRA is one.
Sure.
Anything that I have that generates income is now a financial box. Anything that, and it's interesting because I can use the same money in some of these boxes at the same time. So I know I talk about it all the time, the Brent Kessler life insurance policy, right? So I have the special kind of whole life insurance policy that works as a bank. I put money in that, and then I borrow the money back out, but the money's still being invested, so I'm making money there. And then I pay down some of my mortgage, and I get a HELOC on that amount for the mortgage. So now that money is, I'm not paying the interest on the mortgage, and I have a HELOC, which I haven't touched, okay, but I can use that money if I want. So sometimes, I'll borrow 0% money from a credit card, and I'll put it in the stock market and make a whole bunch of money in stock options, and then I'll pay that off with my HELOC, and I'll pay. So I'm moving the same money around and making all this money that I had no idea I could. I didn't realize I could do that.
Money
before.
needs to be in motion, but I just want to let everybody know that considering coming to investor schooling, that Paul is not one of the instructors.
I am not.
Because that confused me.
Did it confuse you?
Well, I knew what you were talking about,
That's
but
right.
it was right. You didn't explain it very well.
Well, you
So-
should explain it so
but
that people can understand
There's so many
it.
things to explain in there. You went from here to there, to there, there, to
I know.
there.
The point is, I'm using the same money and making money on the same money over
Yes,
and over
exactly
again.
Right. Exactly. So what's the value? How much can you, if you have $1, how much of that dollar can you invest?
Now you're confusing me.
I know. When I give you the answer, you're going to get it.
Okay, I can invest that dollar over and over again.
You could actually use the same dollar and invest it 3 different places.
Right.
So you could actually put it into your home. You can then take that money out into a HELOC. You take that same dollar out and put it into a life insurance policy, invest in there. You could actually use that same dollar over and over again. In each one of those places, it's making money.
Right.
So instead of making, for example, let's say for every $100, you're making 80 cents or 8%, or 8% would be $8.
Right.
So
8% would be 8 cents on
8
the
cents.
dollar.
Yeah. Okay. I'm thinking. Okay.
Okay.
1,000. I can't think those numbers so small.
I
They're so
confused-
small.
I confused
they're so small,
Larry
I can't even
Stein.
think about it, right? But if you have $100,000, let's make it easy.
All right.
You know
This
it's
is worse than
$8,000. Well, you can take that same $100,000, put it in different places, and the same $100,000 will make 8% in one investment. You could then take that same $100,000, or actually a portion of that $100,000, put it into a second investment while it's still in the first investment,
Right.
and you can make 3 or 4% on that one. You could take that one out of that investment, put it in another investment. And if you don't know how to do this, you need to come to investor schooling. And if I've confused you, you definitely need to come to investor schooling, because how much have you increased your net worth since you started here?
Probably 3 times, but it's definitely at least 3 times now. And the thing is, now that I have this knowledge, it's going to continue.
Right, it snowballs.
There's no doubt in my mind that I am a millionaire within the next couple of years.
Right.
And the reason
probably
is
sooner than that.
well,
I'm going to ask you a question. So
I'm
you
always
came here
conservative.
as a student before you started working,
Yeah.
right? You were a student.
Uh-huh.
Would you tell people? Were you negative net worth at the time?
I wasn't I wasn't negative.
but you didn't
net
have
worth,
much
but
money,
I
I know
didn't. I
that.
didn't have a lot. No.
Right. Okay, so that I knew. I knew you didn't have you
Right.
didn't have a lot of money when you first came as a student, because even as a student, you're like, I don't know. I don't have any money. I don't know what to do.
Right.
And then all of a sudden now you're financially, you have absolutely no problems now, right?
I have 0 problems financially.
And you're watching your net worth grow tremendously,
Yes.
which is really, really cool. Because
So-
I watch it too. I know you come in here all the time. You go, hey, listen,
Yeah.
I got this 50,000. I don't know what to do with it. And it's great when you ask me that question. I love
Right.
it.
Well, the thing is, the real value at a school isn't just real estate or just stock options, but it is actually changing the mindset of people, because the average person doesn't know all these different things that they can do with their money. So, they're all in the rat race. Oh, I got to work this job and then I got to pay all my bills. But there's so many different things they can do before they pay their bills so that they're making more money and then pay their bills with the money that they're making.
Right, exactly, right. So that's just one thing.
Right.
So there's so many things. We apologize to you guys watching on Facebook and on LinkedIn and Twitter. We're obviously having some streaming problems, but hey, online, if you want to go to PHT right now, we are live, and of course you can call in at 855-939-1137. 855-939-7. You can call in right now, and you can talk to us about anything that has to do with anything.
Are you telling me that all the people online just missed that brilliance?
Yes, they did. They missed the brilliance. Luckily for us, though,
Yeah.
I know that you as the marketing company, or
Yeah.
the marketing person, not the company, but
Right.
the marketing person working for the company, will have a replay of this for
Yes,
everyone.
absolutely.
All right, so should we go out to a commercial right now, Paul, and then we can come back and we can talk about something else?
Yeah, I think that would be a good idea. But before we do, I just want to say, if you'd like to meet me in person today at 4 o'clock, I'll be performing at Patty Wax on South Street. That's November 13th, Saturday, 4 p.m., 4 to 7. I'm doing a piano show. Come down, talk to me about investor schooling, and we'll get you signed up to come for a class on Thursday.
Sounds great. So let's go out to commercial.
HD.
All right, welcome back to Investor Schooling Live. I am Larry Steinhaus, and I am here with our marketing director, Paul Moderano.
Hello.
And we're just having a blast on the radio right now. Of course, you can give us a call at 855-939-1137, 855-939-1137. Hey, in a couple of minutes, we're going to be talking about some new interesting information. One is I'm going to be talking about how long you need to have an FHA loan for before you can move. I'm also going to talk about building your credit scores too. But right now, I think we have John on the line from Burlington. What's going on, John?
Hey guys, how are you?
Good. What's happening? How can we?
I catch you guys off and on. I catch you guys off and on. I'm very interested. I'm very conservative. I'm in my mid-50s. I have expendable money to do it, to do what you're doing. Right now, I invest in solar in New Jersey in a private way.
Awesome.
It's less risky for me, and it's almost guaranteed. However, I love what you guys talk about, but I told Jim I'm a sales guy, and I come from the Depression somehow. I don't know how, reincarnated. I still had the first dollar that I made when I was 11,
Wow.
and I'm just scared of the market, and I'm scared of What is your business model? Help me understand your business model so I know where you guys make your money. And hey, I'm okay. Everybody's got to make money.
Well, we sell education. That's what we do. We're an education company. We teach people how to invest. We teach people how to understand IRAs. We teach people how to understand the stock market. We teach people how to understand and buy real estate. We will set you on a path that will do that for you can do that and make money doing that. So some of the things we teach are extremely risky. Some of the things we teach are very simple, very conservative. So if you're conservative, there are certain things you can do in the stock market that are very conservative. So you could buy some basic stocks, like we talk about AT&T as being one that's a simple stock that you buy that stock and then you sell covered calls on it, and you can make anywhere from 1 to 3%, probably not 3% on AT&T, but 1 to 3% a week on your money by selling covered calls on a stock like AT&T. So they are conservative. They're just little known techniques out there. One of the things that I discovered many, many years ago is no one really teaches financial literacy. You can't go to college and learn financial literacy. Nobody's going to teach it. You can't
Agreed.
learn.
Agreed.
And the only other people teaching it or trying to teach it are salespeople. Look, obviously we're going to sell you our program, but that's not what we're talking about. The people who are going out there and they're saying, hey, I sell IRAs, let me teach you how to IRA. They're not really teaching you everything they can teach you about an IRA, because they're actually, believe it or not, by law, they're actually stuck within their own funds. So let's say you had a registered rep, and I really hate this law, but you have a registered rep who sells 5 funds, and that's all they sell. And they start to talk to you, and they have a great conversation with you, and they go, oh my goodness, I've got the greatest investment for you that's going to meet your needs perfectly, because it's exactly what you need, but I don't sell it. Go talk to somebody else. The second he does that, he's actually violated SEC law. It's called selling away. He actually loses his license and gets a heavy-duty fine for telling you that you should go somewhere else and buy an investment somewhere else. So how can he actually have your best interest in mind when the law says he's not allowed to have your best interest in mind? Isn't that crazy?
Pretty crazy.
No, it makes perfect sense. It's like everything else. You don't know what you're doing. I love to hear that you guys get paid to educate. How many classes do I? Is it 1 class? Is it 10 classes? Do I pay as I go? How does that work?
Well, I'll tell you what. Why don't you start with this? We invite you to a free class, and that's it.
Yeah.
We invite you to a free class. In fact, if you don't show up for the free class, we don't even want you as a student. And that's the truth. And the reason is because we want to see your commitment level to see if you're actually going to be part of this or not. Look, Phil and I, and we don't need this money. This is something that we do because we really enjoy doing it. On the other side, we're capitalists, so we charge for it, right? But if you go to investorschooling.com, you could come this Thursday and you could show up, and it's a class. It's not a sales pitch. A lot of times these guys, they fly in from other companies, whatever these other companies are. I don't want to name them. They fly in for a Thursday night.
Been there, done that one.
Yeah, right.
Been there, done that.
Right, and it's a 2-hour sales pitch to sell you a 3-day sales pitch. We don't do that. You come and you actually sit in a class. So like the other day we talked about something called velocity banking, using a HELOC to pay off your mortgage and save 2/3 the interest. And I just taught the class. So anybody who showed up for that class for the first time learned that technique, and they learned the technique. If they became a student or not, they got that technique for free. So it's the same thing on this Thursday. I'm not sure what we're teaching because I don't really know usually until Tuesday or Wednesday what I'm going to be teaching, because sometimes it's based on like students' questions, and sometimes it's based on maybe a coaching appointment that I had with somebody who had a question. So I'll teach it. But the topics we teach are anything from credit building to lending money with your IRA to IRAs, life insurance. We teach life insurance. One of the things that I do not have a life insurance license. They have these companies, and they advertise on this station too. Some of these companies that are using life insurance as tools to lend money, and using life insurance as tools, and they call, for risk-free retirement. I don't want to say their actual name, but they're using life insurance, and I know how
who
they're
they are.
doing it. What, I'm sorry. What'd you say?
I know who they are.
You know what I'm talking about, right? But and they don't even say it. They don't say in their ad that. Yeah, they don't say in their ad that it's actually a life insurance policy. Now, I realize why they're not saying it, because it probably would turn off half their audience. But I know how they're doing it, and we teach how they're doing it. But I don't sell life insurance, so I would then say, okay, go to them or go to somebody else and buy life insurance and use the policy the way they're teaching it. Let me explain how it works, and I'll do the math for you. You know, some of the things they say in the ad, I'm not going to say they're wrong, because they're not. They're absolutely right, but they're slightly misleading, and one or two of the words that they say in their ad bothers me. But it's fine with me. I don't care. I actually think it's a great idea. It actually works, and if you use them or use somebody else, that's okay too. The same thing with other companies too. You know, there may be somebody out there that's selling funds, right? I think there's another advertisement on 1210 that sells funds. We know how to do that. We know you can create your own fund, and you could sell your own fund. We create funds, and we talk to our students about creating funds. So it's so deep, the stuff that we teach. I mean, I'll tell you something. You're listening to 1210, right? The odds are you're a Republican conservative, correct? Is that correct?
I'm far more right than that.
Yeah, okay, and that's fine. Right?
I'm far more right than that.
Right, and you know, it's just because that's who listens to the station, right? So you ready? I'm gonna ask you a question, and I already know your response. What do you think of Obamacare?
It was great.
Really?
Because people actually had to pay for something, anything.
So when you say
because
what do you
Medicare,
mean?
Medicaid, okay, there was a minimum buy-in. There was a minimum payment for someone to actually go do something. You couldn't just show up if you were unemployed or if you're on welfare. You couldn't just show up to the doctor's office and say, "Hey, fix me."
Do you know you actually could and still can? I'm not going to get into that part because that's actually. But one of the things I teach.
Okay.
One of the things I teach, and it's kind of hard because I'm going to go down the rabbit hole with you, and I don't want to do that right now. But one of the things I teach is like when it doesn't
fine.
matter if the Republicans or the Democrats come up with a bill or a law that passes, I teach you how to take advantage of it. So I'm going to tell you something that most people didn't know. Obamacare, first of all, was not insurance. Most people don't even realize that. But Obamacare was the greatest set of rules for the small business owner ever. And for insurance. So if you had a small business with less than 15 employees, Obamacare was fantastic if you knew how to use it. Most people don't know how to use it. They don't know how to benefit from it. And I taught an entire class on that one day. And again, you know, we're sitting in a room. I've noticed this, and it doesn't have to be. So if you're a liberal listening or if you're a Democrat listening, just understand that. But we've noticed that a lot of the people that come in the door happen to be, you know, entrepreneurial people happen to be leaning towards the conservative side. So when I teach an entire room of conservatives Obamacare, and when they're done, they're like, oh, I should be doing this. I find it absolutely fascinating. So we'll teach you how to do it. Like some of the Biden's new tax programs, right? You know, if they actually pass, and every single one of them is falling apart, which I find fascinating too. Every single one is falling apart. But if any of those pass, we actually will teach you how to not worry about them in your life. When he was talking about eliminating the 1031 exchange and eliminating the cost basis. The cost basis one was unbelievable. But the cost basis one, we teach how to avoid that. If anyone ever changes that, we teach that as well. I'm going to guess that you are going to show up on Thursday. Is that correct?
I will not because I have a commitment that I need to be in Buffalo, but I will be there next Thursday.
All right, great. Because I'm going to make sure you say hi to me because you're a fascinating guy. And I could keep talking to you all day, but we have another John actually on the line too, and I wanted to and I need to talk to that other John. So John, hopefully we'll see you soon. What's up, John?
Hey, how you doing, Larry? Hey, Paul.
Hey, John.
Oh, I know who John
John Baum?
Yeah, it's John Baum. Yeah, exactly.
What's up, John?
Hey, how you doing, guys?
Good.
First of all, Larry, I wanted to disagree with you. I thought Paul did an excellent job of explaining a little bit about putting his money in different places.
Thank you, John.
The average person really got that. I think that was really a good job.
So I'm going to tell you why.
And I got a question, Larry.
Okay, sure.
Go ahead.
Well, I'll tell you, before you ask your question, the reason you understood what Paul was saying is because you're a student of investor schooling, so you were able to follow it. But for the average person, that was very confusing. Right. But it's okay. It's fine. That's the idea. Is you have financial literacy now, and you could follow what Paul's saying, where most people can't. But okay, now what's your question?
It actually relates to your Thursday class, which was great. But the velocity banking.
Yeah.
And I know you can't answer this right now, but I'm sort of hopefully putting you on the spot so you can
ask it anyway. Thanks a lot. Go ahead.
What about getting the HELOC, but a big enough HELOC that actually you roll your first mortgage into? Did you ever run the numbers on that?
I didn't run the numbers on that, but that's defeating the purpose because now you have a HELOC that you're going to run out fully. But so there's so many different things to use a HELOC for. The way I described it the other day was it because you have a primary mortgage that's a majority of your equity in the house, and then you get a HELOC to pay it down, and then you use the HELOC as a checkbook, and the checkbook will actually make your interest rate go down. And I mean, it took me 45 minutes to describe it, so if you're listening on the radio right now, you're probably not following that either. But I'm telling you, this is a fantastic idea. But again, there are different reasons to get a HELOC. Sometimes you're going to get a HELOC just to pull the equity out of your house to buy another house, and that may be a better choice for you than saving the money in your mortgage. So Velocity Banking works. I wanted to prove it works, and that's basically what the class was about the other day. So John, why don't you tell everybody about your experience with investor schooling?
Well, I think you guys nailed it earlier. The reason I called is it gets you thinking in different ways, and that's really what it is. I mean, when I came to my free class, I knew within 10 minutes that I wanted to sign up because I liked the mindset of everybody in the classroom. It's where I wanted to be. I thought, hanging out with those people 2 times a week was going to be great, and it has been. And like you said, I've done a lot of the stuff. I took my IRA, bought a property with it after I was investing in the stock options with it. So I've done everything you've talked about already this morning, and I'm not done yet. I still have, I only had a couple $100 left in my IRA after buying the property, and I've actually in 2 months I've already times that by 5 again. I had $700. It's at 44 now.
That's
because I made that back in the 40s. So
4,400, not $44.
It's been great. 44, yeah. No. So I took everything I had in my IRA, bought the mobile home park in Florida, and I only had $700 left. But that was in early September, so now 2 months later, that's at $4,400 again. So I'm looking to get that even bigger, and I'll try to buy another property.
Right, and I'm not going to say how much, but you had several $100,000 in your account. You bought a mobile home park with it. So I have a question for you. 3 or 4 years ago, would you have ever thought that you were going to buy a mobile home park?
No, never. And I'll tell you what, I'm looking at more. It's a great investment, and awesome? I never would have got that if it wasn't for you guys.
And I appreciate that because that's exactly the point.
No, it's been great.
If you're listening right now on the radio and you're like, "Well, I would never buy a mobile home park," that's fine. You don't ever have to buy a mobile home park. But if you don't even know how mobile home parks work and how you can make a lot of money, what's your like return on your investment on a mobile home park per month? Have you guys figured it out yet?
Yeah, and I don't think Phil would be upset if I mention it. But we took when we bought the mobile home park, our rent roll was $6,200 a month. 2 months later, we're already up to $7,600 because the previous landlord never raised the rents.
That's great.
It was so under rented. So we're making a month now, and we know it's going to go higher.
Absolutely.
I mean,
absolutely.
Every time somebody leaves, it's going to go higher. We know that. So it's been nice. And again, I know you know this, but for your listeners, the idea is when I start drawing from my IRA, the money from the mobile home park every month is going to replenish what I withdraw. So my IRA is never going to run out of money. It's phenomenal. How do you beat that?
That's a beautiful thing.
Yeah, we teach people that all the time. The required minimum distribution, we actually say buy real estate and let the rent become your RMD. And now not only does your IRA go up every year, but you're also getting income off your IRA. It's so brilliant that when you actually look at the numbers, it's amazing. Take advantage of the laws. And again, I don't care, Democrats or Republicans, right? They say you have to take an RMD. Great, I'm going to teach you how to take an RMD and not have your IRA go down. Actually, have it go up. All right, John, we appreciate it, man. We'll see you this week.
Yeah, we'll see you Monday. Thanks, man.
Thanks, bud. Talk to you later. All right, so if anybody else has a call, 855-939-1137. 855-939-1137.
Phil goes away and everybody calls in.
I know that's because he's always so busy talking and nobody can talk to him. I have a question for you.
What's up?
Do you know how your credit score is actually calculated?
Yes, because you taught me that.
I knew you were going to say that.
But I'll let you explain, if you're going to explain to the listeners, how the score is and yes, that's another thing we do at the school, is we all know how to manipulate our credit scores to whatever we want. So the only time you really need a credit score is when you're buying a car or when you're buying a house.
Right. With a bank.
With a bank.
Right, with a bank.
And by the way, that velocity banking thing, yeah, the average person doesn't realize when they get a 5% mortgage, they're really paying, what was the ridiculous percent?
Over 30 years, it's over 50% interest.
Right.
But in the first year, it's like 80% interest.
Yeah.
You're paying, I think it was 88% interest is what you're paying in the first year of a loan. So it's not 5% interest on a 5% loan. It's 88% interest in the first year. So we teach you how to lower that too.
Yeah, banks are thieves. Anyway.
Yeah, they're smart. They make you think one thing when another thing happens, because it's all about. Because most people think the payment is nothing. When you're thinking payment, same thing when you buy a car. When you're thinking payment, you're making a mistake. You need to think everything. You need to think about the price of the car. And you need to think about the interest rate and the loan and what you're going to accomplish by all of these things. That's why I'm telling you the one-pay lease we talked about earlier. The one-pay lease is the absolute best way to buy a car. You want to learn about that, you need to come to Investor Schooling, because I'm going to teach you about that. By the way, that's in my book. So my new book coming out. I have a new book coming out called Money Hacks, and the subtitle is Because Everything You Think You Know About Money Is Wrong. And that's the truth. And
this is the truth.
You know how many chapters are in that book?
12.
22.
22.
I have 22 chapters on money coming out of this book called Money Hacks. By the way, you can pre-order that. Go to barnesandnoble.com, and you can pre-order that. It's not going to be out till spring, but you can pre-order it now, and you'll be first on the list to get it. But it's going to be a great book for everybody out there. So real quick, I'm going to talk about how credit scores are actually calculated. And nobody knows this, because, you know, the myths about credit scores absolutely amaze me. One of the biggest myths is the inquiries. So in other words, when you apply for a loan, you get you're going to ding my credit because you're applying for a loan. Look, I'm going to make sure you fully understand something. So I know you know the answer to this, but I want you to give me the answer that you would have thought it would have been. So if somebody had on their credit score, if they had 50 inquiries, in other words, they had tried to apply for 50 different places for credit in the last year, what do you think, what would normal people think that person's credit score would be?
Well, Larry, I haven't been to investor schooling, and I think that would bring my credit score down to about 580.
Yeah, right? Isn't that funny how that happens? But most people think that will make your credit score go down.
Nope.
So I'm going to tell you exactly. Nope, that's exactly right. So do you know that that only 10% of your credit score, by the way, credit scores range from 300 to 850. Now, here's the really weird part. If your credit score is the absolute worst ever, it's 300. You actually get 300 free points. Remember when you took your SAT and they used to say you got 200 free points? So it's the same thing with credit scores. You get 300 free points. So your credit score really is a range from 0 to 550, not from 300 to 850. Because if you take the 300 free points out, right there. So only 10% of your credit score is calculated for inquiries. So the absolute worst you could ding your credit score if you have 10 or more inquiries. So if you have 10 or more, it'll be 55 points. So you can actually have credit scores in the high sevens with 55 points taken away from your credit score. I actually I have anywhere from 40 to sometimes 60 inquiries. Because I just apply for credit cards almost every day. Not every day, but
same here.
But I have so many credit cards now, and again, if you guys are listening, like, oh no, he's got all these credit cards. I don't use them. I just apply for them because it makes my credit score go up, and that's something else we're going to teach also in investor schooling. But real quick, I got Mike on the line. What's going on, Mike?
Everybody's calling.
Hey, so I'm calling to find out where Phil, that mafioso shyster, is at today. Did he get pinched or what?
He's fired. We fired him.
We put him in a cement shoes, and we dropped him in the water.
We dropped him in a vat of aloe.
All right.
So are you a fan of the show, Mike?
I love your guys' show. I actually catch it. I love your guys' show. I actually listen to it on 3 separate radio stations. I catch the reruns in the Philly area all the time, and I'm a guy who's a little bit hesitant. Otherwise, I'd be there on a Thursday night. You know what I mean?
Get here.
What are you waiting for?
Yeah, what are you waiting for? You might learn something for free? Come on,
something
for free.
I'm a belt and suspenders guy, I guess. You know, so maybe I will be there one of these Thursdays. But again, I love your show. You guys should do stand-up comedy somewhere.
There really should be. Paul, I know you.
A belt and
I was going to say, you have to have a good joke for belt and suspenders.
A belt and suspenders? You
Right.
wear both at this. That confused me a little bit.
Right.
What? You mean like a
probably
tie and suspenders?
He's probably a fireman.
Fireman, belt and suspenders. That would make sense.
Yeah, but
Are you a fireman, Mike?
I can't make a joke in there, though.
No, I just want you to come in on a Thursday night, and we'll make fun of your belt and suspenders
that
if
we
you're
will
wearing them
definitely
at the
do.
same time.
Hey, Mike.
That we will do.
Hey, Mike.
By the way, that's Pedro talking.
Yeah, I'm the producer here. What you should know is we're not that smart. We are just regurgitating
Speak for
information that
yourself.
we've, been told. So don't feel like you can't come in because you're not gonna be on the level of other students in the class. A lot of people come in there not knowing a thing.
Yeah, that's actually true. So people come in, you have to understand that I'm constantly increasing my knowledge from other places that I learn it from. But, just the basic knowledge is important, especially with financial literacy. And if we tell you teachers something simple, like we just talked about your inquiries being only 55 points and how you can get your credit score in the high sevens, these are all things that you need to know. And once you understand them and you start using them a little bit at a time, and, after a couple of months, you're using a lot of the techniques we talk about, and everything starts to change. We've had people come here. We had one guy on the verge of bankruptcy, and within 3 months, he was buying 4 rental properties. And we'll play that video for you one day too. I mean, it's for real. This is the stuff that we do. This is the stuff we teach. Pedro's our producer, but he was started as a student also. Right. And Pedro you're on your 3rd Subject 2 house?
Yeah, correct.
Right, so
That's
Subject 2 is a way to buy houses with absolutely no money, and we're going to teach you how to do that too.
And Pedro's not that smart.
Pedro's definitely not that smart.
I'm definitely not that smart.
Yeah.
No, he's pretty smart.
Actually, Pedro. Yeah. So Pedro learns quick, just like Paul. But Mike, I believe you could learn quick too. Are we going to see you on class on Thursday?
I'd love to be there. But again, it's one of those things where, love the ideas you guys talk about, especially actually what the gentleman 1 or 2 calls before me was talking about, the mobile parks in Florida.
Yeah.
I love Florida. I love mobile parks in Florida. But talking about it and pulling the trigger on it are like 2 different things.